All attendees are in listen-only mode.
Okay, go to meeting. Don't fail me now. Do not fail me now. So far, so good. Look at bonds. I knew this was going to happen. Not really, but I'm pretty sure. Oh, boy. All right, we're going to... Hello, anybody there? Am I live, you think? Oh, boy, I am. Hey, Polly, how are you? Thanks for coming today. I'm going to try doing... So I have two screens up right now. I'm sharing two screens with GoToMeeting. Does that help or hurt? Is that... Get rid of this for a second. Let me know how you feel about your screen view right now. I have two of my monitors showing at the same time. Let me find my question and answer box. Let me know how you feel. Let me know how you feel about that. Or if I should toggle back to just one screen. I'm open-minded. Right, Mike, does that look okay? I mean, is that, oops, I don't want that. We don't want soybeans. I want bonds as they're breaking right now. I knew this was going to happen. ZB. There we go. Let's get that on there. Okay, I'm going to toggle back and forth, I think. Thanks, Mike. Anybody else has an opinion, type it in. Let me scroll down here a little bit. There we go. All right, what is this, 15 minute? Let's go to 30. This is like the pre-start, the pre-webinar setup. You guys are behind the curtain right now. Oh, that's interesting. That's an interesting setup right there. I don't believe it, though. I don't believe what I'm seeing. So there's nothing to do there. Okay. Ali, good morning. Oh, so I'm looking at the audience view. Interesting audience view. You have the domes on the left and then the chart on the right. Interesting. Okay. All right. Let's change this back to 30 minute. We should have a decent sized group here today. So feel free to, I think we're going to stick with NQ and ES today. I just don't, the screen real estate is going to be an issue because I'm running GoToMeeting side by side, and that's going to cause some kind of conflict here, which I don't like. So let's close the bonds for today. We'll look at NQ. We'll look at ES. Put some trades on. And see how we do. I think we have a couple of, numbers coming out this morning. I want to say, we have retail sales and then export prices. Let's double check to make sure I'm accurate though. Let's go there. Just take a look at the regular calendar here. Yeah, Ali, we had 2 ticks today. We had a super trend trade. Retail sales and import-export prices. There we go. Industrial production a little later. So 7:30, we'll have, some kind of something maybe. I don't know. The Fed has a listening session in Atlanta. So there probably won't be a lot of policy that's disclosed or opinions that haven't already been stated. So I don't expect a lot of stuff from Atlanta. Maybe not Atlanta. Maybe it's Austin or Augusta. Yeah, maybe Augusta, Georgia. It's in Georgia somewhere. Hey, Ali from Paris, welcome. Do have some folks from all over today coming in. We're going to officially get started here in about 5 minutes or so. So thanks for coming today. Wow, look at this. This is a super trend for sure. This signal is calling 10 o'clock in the morning on the 12th. Has not changed on a 30-minute chart in the NQ. That's a pretty bearish thing here. Bullish thing here. Sorry, did I say bearish? Bullish thing. I have CCI in the bottom. Ali is Scottish. Paul talks from Paris. I'm Scottish. Oh, okay. I'm sorry. I'm not following the question box. Where are you physically sitting right now, Ali? Let's get to the bottom of this confusion once and for all. So Paul's in Paris, not Georgia. Ali's in Scotland. I'm in Chicago. And the CME Group's electronic Globex markets all over the world. No matter where you are, there they are. So right before we get started here, let me poll the audience here. How many people in attendance, if you are not existing Infinity customers? So if you don't have an account with us, type in the word not, N-O-T, not, K-N-O-T, N-O-T. I'm not going to hold it against you, I promise. I'm just trying to get a feel for the demographics of today's event. We have a lot of customers that come also. Not a big deal. All right. So I could go down to one screen and go side by side like this, but I don't know if I want to do that. New to this platform. Okay, well, hopefully you're not after I'm done here today. But thank you very much. I'm going to put myself on pause for 1 minute. I'll be right back. All right, I'm back. Enrico has the live account. Very excellent. We have, I don't know, maybe a third of us don't. Maybe 40% don't. That's okay. All right, let's officially get started here. Good morning, everybody. My name is Jim Cagnino with Infinity Futures. I'd like to welcome you here today to our event about the InfinityAT trading platform. It is Tuesday, July 16th, 7:30 a.m. Chicago time, Central Standard Time, I do believe. Again, I'd like to welcome everybody. I want to remind everybody that trading futures, options on futures involves substantial risk of loss, not suitable for all investors and traders. Oftentimes in futures trading, you have a high combination of leverage and volatility. Although that can be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition, money I could afford to lose. Doesn't change my lifestyle, doesn't lengthen my retirement horizon, doesn't overly anger Mrs. Cagnina. I throw that last part in there a little tongue-in-cheek, but it's important. Stress in life matters, and the more stress you have, the harder it is to make rational decisions. So be careful with that, only fun with risk capital. Be happy to talk to you about that. Everybody here is a customer service representative who is an NFA member and registered with the CFTC and have been here many years and have been talking to and listening to traders from around the world for a very long time, almost 10 hours a day, and also our witness to these markets on a daily basis. All right, we're back. Yeah, I just put this is the home page of Infinity. I just put the little risk disclaimer up here so you can see that at the bottom. And today's event, YouTube channel, this will be recorded and placed right here on the YouTube. This will be the #1 question of today's event. Just click on that little YouTube thing here and it'll populate our YouTube channel and you'll be able to see this video, pause it, rewind it, and listen to all the amazing things I'm about to tell you today. Let's get rid of that though. It'll slow down my whole entire computer. All right, let's go ahead and get started here. Here's the chart. On the left side, I do believe you're going to see some trading ladders. And trading ladders, you can call them domes or depth of market or trading ladders or whatever you want to call them. What you see here in the middle are prices. It's called, that's why sometimes people call them the price ladder. Here's the mini NASDAQ market. And the smallest price increment in this market is a quarter, or 0.25. Each point's broken up into 4 quarters. On the left-hand side is the what I would call the bid column. There you see the number of contracts that are in the CME's book waiting to be filled at various prices. Those represent limit orders. Those represent contracts. They don't represent people. Some people might have 1 contract waiting to be filled. Some people might have 10. Some people might have 5. You might have a couple of different prices. On the red side are the offers. The red side is the sell side, if you will. Those are limit orders waiting in the market, in the book, live at the CME group to sell contracts. Right, and they're matched in the middle. That dark blue line here is where a buyer and seller last agreed to a price. And they didn't agree personally, of course. They didn't call each other up, or it wasn't prearranged. But this is first come, first serve at the CME group. So when the first guy in line at a certain bid price matches the first guy in line in a certain offer price, then that transaction occurs. Sorry about that. We had a background television TV noise we had to get rid of. Okay, so that's how that's the anatomy, I guess, of the ladder here. And you can see prices are moving around. The market's open at 7:33. The market's been open since 5 o'clock last night. It's been open all night, all morning, and it will be open all day until the close at the end of the day, which is 4 o'clock Chicago time. Keep in mind with the stock index futures, there is a little 15-minute halt from 3:15 to 3:30 right before the close. Don't ask me why, but for all practical purposes, the index markets really are done trading at 3 o'clock Chicago time or 4 o'clock New York time, which corresponds with the New York equity market closing, the cash market. So that's that representation. On the chart side, we have our new web-based charts. You'll see I'm going to go with a black background today. We have a candle chart up here right now. Candle, of course, represents the open, high, low, close of any given period. I have a 30-minute chart up here. So every 30 minutes, there's a new candle that's generated. So at 8 o'clock, there'll be another candle that starts here. Right where my cursor is, my crosshair is right now. We're in the 7:30 to 8 o'clock period. At the bottom, I have a CCI indicator, commodity channel indicator, and I like to look at that when we're making trade decisions. And specifically, there's a 0 line in the middle. There's a 100 line at the top, and prices above the 100 line are supposed to represent overbought areas. And there's a minus 100 line at the bottom, which is supposed to represent oversold. Prices below that, oversold conditions. Again, this is a generality. This is an indicator to help you decide, alongside other trading ideas, what's a good idea and what's a bad idea when making a trade. When I look at CCI, I like to look at the 0 line cross more so than I like to look at whether it's overbought or oversold. Okay, and sometimes here, as an example, yesterday afternoon, we had a cross where we went from minus 100 within two candles over through the 0 line. We drove up here, and it was a good long indicator. Other times, it's not so good. I mean, here we had I don't know, this is 12:30 in the morning. We had another cross, but it wasn't as powerful, and it was in a low volume period of the day, right? Low volume period of the day in the middle of the night. Things don't really pick up until about 2 o'clock, I would say, when the European markets start to open. Okay. Placing this other green line is indicator called super trends. Right now we are in a super trend up. It's green. Let me try to show you where it started. And the state of this equity market is very much a bull market. Here we had the first signal. We went from bearish to bullish, and this was a couple of days ago, and we just kept going and going and going. And it keeps just kind of trailing a stop is the kind of idea here on the super trend indicator. But I like to get a feel for it. I like to see what that says. I don't use that all the time as a standalone trade idea, but it's something that you could add. The studies on these charts there's not infinite amounts of them, but there's all the big ones you've ever heard of, and then some on here, and they're all customizable. You could pick your poison from here, from the charts, and go ahead and trade like crazy. So right now we're in what I would consider the pre-market, right? It's 7:30 to 8:30. New York hasn't really opened yet. Maybe there's not as many institutional participants in the market just yet. Everyone's queuing up for what's going to happen right now. So what I'm interested in here, let's say I'm interested in a long idea, right? So I'm going to use the infinity ladder to go ahead and place some trades here. I'll just make a quantity at 1, quick click checked, which means as soon as I click a mouse, the order is going to go in. And then I'm just going to randomly select a price. I'm going to click on we're trading on a simulator here. You get this little reminder. And by clicking on a price in the ladder, it will generate an order that's sent to the exchange, right? So here we have a limit order to buy one contract at 79.87 even. And I have a little 1 here in the limit column, which reminds me, hey, Jim, yeah, you have an order here. It's there. Now, if this were a live account and you had this 1 here, this is telling you that your trade was at the exchange. It's already there. It's in the order book. It's in line behind, right now 18 other contracts, maybe less, and you're waiting to get filled, right? You're just waiting to get filled. So you can do a couple things. You could just leave it there. Hopefully you'll get filled. If you don't get filled, you don't get filled. Nothing happens. The second best thing that could happen to you is you don't get filled. The best thing is you get filled and you make money, and the Of course, the worst thing is you get filled and you lose money. So, but other than that, you could change this order, right? I could just click on this order and move my mouse up and click again to change the price. Now I just cancel and replace that order up to $79.88, or I could right click to make it go away. I canceled it. It's gone. It's out of the book. And you'll see this happen very quickly with a live account. I mean, this is a simulated account right now, but it's virtually as fast in a live account in most cases. Of course, you're subject to internet connection and all that stuff. So always have a clear internet connection. Always have a standalone trading device if you can for your hardcore trades, and take it from there. So that's the simplest thing that there is. Let's go ahead and just do the anatomy of a regular trade, right? So I'm going to go ahead and do that probably in the ES because it'll go a little slower and it'll be easier for. I have these go-to meeting boxes in the way here. I'm going to minimize that for a second. There we go. Out of my way. And let me get rid of this thing. Okay. So let's just toggle over to ES. I'm just going to type in ES. And I can save all these different chart books. I have a series of tabs up here, but we're going to keep it simple. And then here in a 30-minute ES, we actually do have the reverse, right? We have a red super trend down, and we have the CCI crossing back down over the zero line. So in my world, that would be a good sell. So let's go ahead and do that. Let's go ahead and sell one at the market. But I want to put a bracket around it, right? A simple bracket with automated targets. So I'm going to sell one at the market. And what it does, it'll give me my best price, right? When you sell at the market, you get the best available price. And I have a profit target 8 ticks down. This is automatically placed, right? The first thing I want to do is put my profit target in and immediately then put a stop loss in. My stop loss is 8 ticks away from where I got filled also. 1, 2, 3, 4, 5, 6, 7, 8. So that represents $100 per contract. Remember, each E-mini S&P tick is worth $12.50, and we've got 8 of them here up and 8 of them down. Now, the simple bracket, the beauty of the simple bracket is really a great thing because this order is working at the exchange. It's a limit order to buy contract back. Now, look, I went short without going long. That's one of the things that if you're new to futures trading, it's as simple as that. If you think the market's going to go down and you want to express that opinion, you could sell a contract without having to buy one first. You don't have to borrow anything. You don't have to do any weird stuff with interest. You just sell one. Alternatively, if you're bullish and you think the market's going to go up and you want to express that opinion, you could buy one without going short and just hope the market goes up. Here we're short one, -1. And our target again is here 8 ticks down and our stop is 8 ticks up. So in this particular case, the buy stop is above the market, right? It's counterintuitive a little. It's actually intuitive, but if you're not used to futures trading, it's a little weird. But so the stop is above the market. If you're wrong, you don't want to be too wrong. You want to be able to protect your capital to the extent that you can, and you want to bail out. Now, this 8 and 8 profit and 8 stop loss I put in was totally random. It wasn't based on science. I just threw it in here for demonstration purposes. So if you're following along at home, I wouldn't just go ahead and do this just on the idea that I might know something you don't, because I probably don't. Okay. Now, the idea with the simple bracket is if I'm correct and this market goes down 8 ticks and I'm fortunate enough to buy one back at 30.16 3/4, then my position is going to be 0. It's going to be flat, right? Because I sold one at 18.75. I'm going to buy one back, so my net position is 0, and this will turn into a 0, and that all will be good. At the same time that happens, this stop will automatically cancel. It's called an OCO, order cancels order. And I won't have to worry about forgetting about it or manually canceling it later. Alternatively, if I'm wrong and this market does rally back up to 20.75 and I get stopped out, I'll still have a 0 position. I was -1 and then I bought one back at a worse price. I lost $100 in gross P&L. And this order here, this limit order, will also automatically cancel. So that's the idea of a simple bracket. You could put your brackets in manually. And the other really cool feature is you could change prices and the brackets will still be in effect. So let's say I want to lower the stop. I could simply click on the stop, the number 1, click again at a lower price. I cancel or replace that. The actual instructions for the bracket, the OCO, are on your trading platform here. They're still in effect, even though I just cancel and replace that order. It didn't affect the idea that this is going to be an automatic trade. And the same holds true with the profit target. I could move that down to a price if I'd like, and go from there. All right, so I'm going to just go over here to the question box. I know I'm covering a lot of ground that many of you already know, and I understand that, but we do have some new folks here. So I'm going to try to rescue the question and answer box here. And feel free to answer questions as you go. Jim says, screen looks nice. That's good. Damien, hopefully I pronounced your name right, says, is this a new platform? The platform is not new, right? This trading platform, the trading ladder, we'll call them, the trading ladders. And note, you could have multiple trading ladders open at the same time. So if you wanted to look at crude oil or the currency markets like the Euro FX, or grains like corn or wheat, or bonds like we had before, whatever asset class you want to look at the CME group, you can look at them at the same time. But this is not new. Of course, they're always improved and maintained by the FCM. In this case, is our parent company, Transact Futures, and it's all good. This new web-based charts that I'm showing here are new. It's a new addition to the suite of products that you could have at Infinity Futures, and I like them because they're clean, they're easy, they're intuitive, they give me everything I need, and they're in sync with with what I'm doing. As a matter of fact, that trade that you saw me make is right here. I mean, see these little flags here. Let me just kind of open them up. We have a graphical representation. What happens if I close this GoToMeeting box? Oh, sweet. All right. If we have a graphical representation of what's going on my ladder and on the chart. Simply by just expanding this, I don't know, yin and yang arrow, I'd call them, up and down trade ladder here. And you'll see I have my trades here. So let's just mirror that side by side. Now, if I'm going to change these prices, I'm just going to click and change, and they change. Simple as that. Alternatively, if you wanted to do it from the chart themselves, you're just going to click on it and you're going to drag it to the price you want and you're going to replace it. And it changes on the ladder and vice versa. So totally in sync. I know that I'm way away from your question, but yeah, these are new. This is an addition to the stuff that you used to get. Okay, so let's toggle over. Well, let's not toggle over. Let me show you how to cancel a trade. So a couple of things I could do here. So right now, this is a couple of ticks against us. At the very bottom, you see a minus 25, right? So in theory, mark to market, now we're down 37.50 mark to market. Now we're down 25. Now we're down 37.50. This changes as the market changes. And when I say mark to market, it's that dark blue line, right? That dark blue line going across. That's where the latest transaction occurred. That's where the market is. So if you want to price or value your position, you got to go off of the last price because you don't know anything else. You don't know if the market's going to go up or down. You could only hope. And hope maybe your science is good enough to be better than just a hope. So that just shows you your mark-to-market open position for the trade. The trade on the right is the trade I made earlier before you guys were logged in, and that's closed. That's done. This is the cumulative P&L section of the trading ladder. Okay. So now keep in mind also that the definition of a stop market order, which I have here, the red one at 30.20, is as soon as that mark-to-market line, as soon as there's a a transaction at that price, that triggers that stop. It's not. I'm not in line behind anybody. This stop isn't in. This stop is just there, and it will be triggered as soon as this price is traded. As soon as 30.20 is traded, it will be triggered. You do not have to wait, like in a limit order where I'm behind, I don't know, a couple of hundred contracts. So it could literally trade at 30.1775, and if all the contracts in front of me don't get filled before the market goes back up, I won't get filled. Alternatively, I'm kind of blocking the market, right? We can't get a 1750 print unless I get filled at 1775. That's the definition of how this works. So yeah, we will not see a 1750 print unless I get filled here at 1775. Does that make sense? Okay, cool. So Paul, right now, as I said, the OCO logic is on your PC. All right, so I'm going to intentionally squeeze this down here. I'm going to tighten the noose, so to speak, around my position so that I get either stopped out or I could show the OCO, and we can go on to the next trade idea, the next trade functionality. And let me just move this over to this side. And in the meantime, let's type in an NQ. Notice though, we're still, sorry, super trend is still negative, and we're crossing the zero line. In reality, where would I put my stop? That's a good question. I would at least put it above here, 31.7. In reality, I would put it above 21.75, right? That's the recent highs of the morning. So I would just simply put it up here, which would beg the question, well, that risk-reward ratio doesn't look so good, Jim. I mean, that's a pretty dumb idea. So yeah, you would have to expand your risk-reward idea or go to a two-lot type of situation. So let me show you what a two-lot situation would be. I'm going to move this down to here. And let's do that in the mini NASDAQ. NQ. And two-lot could be multiple target. It could be multiple contracts. It could be 2, 3, 4, 5, depending on your account size. But I'd be careful with the day trade margin here. So this is what we're up against right now. We're going into oversold territory, but not really. We still have that super trend there. We still have a channel up here that we've been trading sideways since pretty much most of the night. So right now, really, there's no really huge trade idea here. But just to mirror the idea of going short the equity market in a two-lot trade idea, what I would do is I wouldn't have a simple bracket. I would go ahead and just try to sell two at the market or close enough to the market. Doesn't have to be at the market. You could be a limit order and be patient. But now I have two contracts. And so what I would do is I would take one off, right? We would take one off at some point as we approach these new lows. I don't know, let's just say 86 even. We would try to buy one back. And then we'd have our two-lot stops somewhere above. And I don't know, maybe, well, it would be way above. But for now, we'll just put it right here. So the idea here is once the first leg of the multi-contract target is hit. So if we're lucky and we're right, let's say that we went ahead and this market broke down and we were able to get filled at 86 even, then we would only be short one contract because we're short two right now. But if we bought one of them back, then this -2 would change to a -1. And then what we could do with our stop is we would cancel that and then move the remaining stop down to one lot. Down to your break-even price. And let's see if we get lucky. We're a couple ticks from getting lucky. Oh, Damon, I'll show that in a second. How to change candles to bars. That's really super simple, super intuitive. You're going to basically go up to your display. but I'll show you in a second. Let's see if we can. I'm going to move this up here. Let's get this going here so we can get this demonstrated a little better. Okay, so now we bought one back, $35 profit. Now we're short one, right? So I'm going to cancel this stop, and I'm going to move my new stop. Again, it's a buy stop. Oops, my bad. Make it a one lot. We only have one position on. To one tick past break even. Okay, so now we have pretty much a free contract, right? We have one. Hopefully, this will run a lot lower, and we've already booked some profit. And if this comes back and stops us out, oh well, that's that. But we still did okay. So that's kind of a multi-contract trade idea, which is really easy to facilitate on the InfinityAT Dome, because no matter how fast the conditions are, you could get your trades in and off just by clicking the mouse once with quick click checked. I mean, that's really the beauty of this thing at the end of the day, at least in my opinion. So let's see if we get lucky here. Let's see how we do. Now, you could manually trail your stop also. So, and then there's an automated version to trail the stop. I'll go over that a little later in the presentation, but we're not going to automate the trail right now. We'll just let this run for a while, and then we'll just kind of slowly creep it down, right? We're going to move our stop down as this thing approaches our target, right? So we're going to do even better worst case scenario by dragging the trail on our stop. Let me just move this over here. If you want to change the candles to an open, high, low, close, you're just going to go to the display. And there'll be a candle, open, high, low, close, line, hollow candle, any of this stuff. That's my technical term, stuff. You could do just simply by clicking and it'll change, and it changes it. Okay, so I'm going to change it back though. I'm a candle guy. You want to do a line, you could do a line. Lines aren't bad actually sometimes, but that's a whole other conversation. Okay, and then we're back here to that. Oh, a couple other things on the display just to mention while I'm here. You could change the background to white. Day and night themes, they're called. You could change the language. We do have an awful lot of language options here in the new charts, including Arabic, French, German, Magyar, which is very popular, Italian, Portuguese, Polish, Spanish, Chinese, and Japanese. So, and that'll change all the menus and everything to the language that you want. Vincent asks, is Supertrend also on the main platform? Yeah, and it is on the main platform, and it's literally called Supertrend. We have a fellow in our office, Marco Bertuglio, who's more of a expert on it than me, but it's right there, Supertrend. Now, also when you add a study, don't forget, it'll tell you at the top of this thing which ones you have applied to the charts already, and you could click on any of those and change whatever parameters you want on that study. Studies, you want to change the CCI parameter, which I don't suggest. The default's 20 for the period, overbought 100, oversold, minus 100. You could experiment if you'd like. It's up to you. Okay, so what are we doing on our trade ideas here? Okay, so we're kind of, in the middle here. We might get stopped out. We might not get stopped out. If you're patient, if you're not patient, keep trailing your stop down a little bit. One way to kind of identify maybe times when you could change your stop is drill down to maybe, a 5-minute chart. Or if you really want to go to be hands-on on this trade, 2-minute chart. Right, and that can give you, okay, so the recent highs here was, at 87, hasn't traded 87 in 1, 2, 3, 4, 5 minutes, so maybe that's a good place to move a stop down. And so now we're working the trade. Now we're in the moment. We're working the trade. And again, I just did a simple, small 2-lot trade. You could have done a 4-lot, a 3-lot, a 5-lot, whatever multiple trade idea that you'd actually like. Here. Okay, and remember, this is pre-market still, right? What's pre-market mean? It's like before New York opens. It's called pre-market, and probably, and you'll see some positioning, right? You'll see some buyers and sellers positioning a little bit, and so you'll see the price of the market change a little bit. If there's no economic releases coming out, the effect will be a lot different than if there is some big economic releases coming out. I don't expect the ones today to generate that much excitement, but you never know. The other thing you don't know is really two types of news, right? The first type of news is things that are published in advance. You know they're coming. Usually a government report or a Fed announcement or a Euro Union announcement, IMF announcement. These things are a natural gas report, a Energy Information Administration crude oil report. There's things that we know ahead of time. And then there's things we don't know ahead of time, right? A rumor, someone does something on the geopolitical stage that surprises everybody, and that could signal either a risk-on trade or a risk-off trade, and the markets could react violently. So that's another reason why I'm sure you always have a stop-in. I mean, no matter how good your technical analysis is or how strong your chart is or what the probability of your trade of succeeding is, there's always this idea that something that's not expected could trigger a volatile response, which may be with you or against you. So this is a great question, and RD asks, what time does the bond market open? And the bond market is like, in the old days, we knew when the bond market opened up, right? 7:20 Chicago time. I was on the floor of the bond market back in the turn of the century, or so it seems. And, before there were screens, and there would be a definite time when it opened, and it would close at 2 o'clock, right? That's when the institutional activity happened. That was when the floor guys started. That's when the floor guys ended. Now we have this 23-hour. Now we have this 23-hour market, virtually around the clock. So for the futures market, there's no official open, right? Okay, so there we go. We got out of that contract. Now remember, this NASDAQ chart. Oh, you can see this already. This NASDAQ is not. This stop is still here. You got to get rid of that. So I'm going to right-click the mouse. And it's canceled. Okay, because we didn't do an OCO on this particular trade because it was a 2-contract trade where we peeled one off. Okay, we were lucky; we were in the right direction here, and my gross P&L was $1.50. Now on the ES side, and I have this question box that keeps hiding my screen, so I didn't see this happen, but you did. We automatically achieved our target, and the stop automatically canceled. Now, every once in a while, just to make sure I don't forget something, I like to hit this cancel all button. This cancels everything. Just in case I didn't forget about an order I have dangling up there or something like that, that's the cancel all button. Can't see the bids and offers. You should be able to see them now, Tom. So that's the anatomy of a simple trade, the basic trade. You position, a target, and a stop. And, to be honest with you, it doesn't get too much more complicated than that. Well, however, we could get more complicated than that. Let's go ahead and do another type of OCO trade, order cancels order trade. What time is it now? I think we have a lot of time before 8:30. Yeah, we have a half hour before 8:30. This is called a multi-target. We're going to do a multi-target bracket. Okay, we're going to wait for a pullback here, and we're going to do a multi-target bracket. So we're going to do a three-lot trade. And I'm going to set my properties up to do this by clicking on that properties button and the actual trade ladder. And I'm going to go over to the third tab over. It says set multiple exits. And I'm going to say, okay, my first lot size, I want to get out in 3 ticks. My second lot size, I want to get out in 6 ticks. And my third, I want to get out in 8 ticks. And again, I'm just randomly making up these levels. There's no science here. I'm going to hit OK. So I have this set up. Group A is the quick pick for this. And you can see at the bottom, Group A is the quick pick for that down here also. So I'm going to change my bracket type to multi-target bracket, and I'm going to select my auto. Now the other thing I have to ask myself is, where do I want to put my stop loss? And for the purposes of this, we're just going to say 12 lot for now. We're going to put a 12 tick stop loss on this trade idea. And this will work with a market order, a stop order, or a limit order. Let's just go ahead and put a limit order in here and be patient. Vincent says I can't find. Are you looking at the web-based version, Vincent? Let me know which one you're looking at. I'll be able to better answer the question. Oh, okay. I don't have that one up, so I'd have to dig around to try to figure out how you would add it to the other platform. Okay, so let's go back here. Now we still have our down super trend. CCI is way, according to this thing, oversold. So a little bit of a contradictory idea here, and that's why I have the limit order up here right now. If I were to go with the CCI, we don't have a zero cross, so I probably would hang tight here and just stick with this trade idea in hopes that we got filled here with the 3 lots so we could show the multi-bracket target. Let's just Mike, that's work in progress right now. Hang tight on that. The answer will be yes. All right, so we're 50 bid, and remember, we're in this slow period right here. We could pull up some other charts like a bond chart in a second. All right, so there we go. I forgot to have my auto check. Oh no, I didn't have my auto box checked, so the brackets didn't go. What do? I just click on this manual button here, send multiple order. So if you forget to check it like I just did, just click this, just hit this send multiple order, send multiple exit order, and it sends it. Some people might prefer that. Okay, so we have our first target 4, second target 8. Wait, I'm sorry, 1, 2, 3, 4, 5, 6, 3, 6, and 8. Right, those are my targets laid out here. Stop is 12 up here, and now if I get filled at on the 83 quarters, then the stop changes to 2. Right, my position went from -3 to -2. Stop changes to 2, and I have 2 more orders working. Now you could also. The cool thing about this, oh, well, I won't even have to do this in a second if I'm that lucky. The cool thing about, look, I got a little drag here, guys. Sorry about that. All right, I got my second one. Now the stop is 1. I could edit, I could move this down to break even if I wanted to. So now I have 2 contracts in the bank, and the third one I moved to break even. And I did it 1 less than break even because now I could cover my commissions if I'm wrong, right? This 24-hour support. No, we don't. All right, so we just got the third target. No, there's no support board. All right, let me make this clear. There's no support board at Infinity Futures. You have a phone number, and you can call around the clock, and the trade desk will help you with whatever you need help on, whether it's the charts or a position that you're in. If you lose your internet connection, if you don't know how to do something, you have that direct phone support. Actually, it's a 2 levels phone support, to be honest with you. I mean, you could talk to your customer service representative here at Infinity, who you're assigned to. Everybody here has one, whether you like it or not. Whether you're a customer or not, you have one, and they'll be they're here about 10 hours a day. 6:37 in the morning until 4:30 in the afternoon, sometimes 5:30 in the afternoon, but they're here during the day. The trade desk is open round the clock. You can call anytime for the trade desk up through Friday afternoon when the market closes, right? So the market closes Friday at 4 p.m. for most markets. for the weekend, and so at that point, then we're closed. Then Sunday afternoon at 5 o'clock, and I'm talking Chicago time here, we're open again. Trade desk is open. It'll be manned. There'll be people you could talk to. And you have email. You could send an email. You could send a Skype. We all have Skype here. You could go on the Q&A on the website if you want. But at the end of the day, there's a real issue, or even if it's not a real issue, even if you need some trade ideas, there's people you can call. And all these folks work for the company. They're integrated into our infrastructure. You're not calling a call center. You're calling real people. Thanks for. Hopefully that clears that up for everybody. All right, so now let's move forward here. We're having fun now. This market's breaking down. Keep in mind. Let's switch this back to a 30-minute. 30-minute view. In a 30-minute, now don't forget, things like some of these indicators, like the super trend, might generate different signals based on different time frames. Now, the 30-minute time frame is bearish right now. See these red arrows here? It's saying sell, 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 and it might not be the same in a 15-minute time period, or 15-minute chart, or 10-minute, or 5-minute. So you got to kind of mind your periods here, and you kind of match it with the duration of the trade, right? Each trade doesn't have to be instantaneous like the one I just did. It could be different. It could be slower. It could be longer. You could hold this trade all morning. You could hold this trade all day. If you have enough margin in your account, you could hold it overnight. All right, let's move on to trailing stop. Couple of things here. I'm going to put a position on, but I don't want the trailing stop to start until the position starts going my way. Let's say by 6 ticks, and then the stop loss I'll put at 12. The distance is going to be how much the stop jumps. Okay, let's make this to 12, so it goes to break even. I'm going to put auto on, and let's go ahead and try to sell. Oops, I don't want to do a 3. Well, we're doing a 3 lot anyway. There's my stop, and here's my trail. And the trail is the trail idea is that if you catch a trend, then the stop automatically moves down along with the trend that you're in. And this is very hard to demonstrate because you don't get too many trends in the pre-market. So we'll wait and see what happens here. But I would encourage everybody to practice the trailing stop and see if that's for you. I prefer the manual. I like to be present. I like to be present of mind and body and be able to change things on the move and make decisions on the move, because let's face it, at the end of the day, sometimes these markets are very volatile and move very quickly, and what you see in a chart will change from time to time. Kim is having trouble launching charts. All right, let me give it a try here. I am going to open up my trading ladder. I want to open up crude oil. Let's add crude oil. I think, what are we in crude oil? Crude oil, how come I don't have crude oil? All right, it's probably up here. Here we go. I have, it looks like August is still where all the action is. I'm going to click on this little down arrow. It's going to open up a new browser window, and it's opened up a second one. It's defaulted to NQ, so I'm going to type in CLQ, and then that should light it up. So, Eric, yeah, you're right. That's the procedure that just worked for me also. And here you can see the opposite. You could see the super trend up. You could see an overbought condition, and that's going to be the case a lot of the times. So I wouldn't be crazy about jumping into that position, but it's something you could do. In the meantime, over on our other trade here, anything happening? No. So we'll wait. Go back to CL. You could pull apart these tabs and have two screens open at the same time. Let's go ahead and just put a, well, we're going to wait until, I'm going to wait till 8:30 to do a breakout bracket, because that's when a lot of people like to do the breakout brackets. So we got a couple of minutes here before we do that. But thank you for that suggestion. The interesting thing here about the crude oil chart, by the way, and I haven't followed the news this morning because I was setting this up, so I don't know what happened this morning around, oh, this was yesterday, my bad. I know what happened yesterday. Okay, so we're still kind of going side. I like the short trade right here in the crude oil, so let's go ahead and put one on just for fun. Hopefully you have bigger monitors than I do. My space is somewhat limited. You would think I would have more. Remember what I was telling you about time frames here. Super trend has us going long instead of short on a longer term chart. We're about to cross the zero line here, so I would sell one here. So let's do that. Let's go ahead and see how the ticks work in a crude oil. This is a very popular market, by the way. Let's just go ahead and click kick. Just put a, oops, quick click. Put the limit order in. Move it down a little bit. Okay. Now, I had that bracket already there. I forgot about it. I could keep it or I could not keep it. In this particular case, I'm probably going to cancel it. So I'm just going to go to cancel all. And this will cancel the bracket and the stop order and the buy order. Okay, I got to cancel all. And there, it's gone like that. And I'm just going to look at the chart for where I want my stop to be. You know, what levels would I want my stop to be? Here at 87 is an important level, of course. And then at new highs would be an important level at 60. That would be kind of extreme. I don't think we're going to retrace all the way back up to 60. There is a retracement tool here that's kind of cool. You could add pretty easily. And you just do that by going to the drawing tool. And we're going to go ahead and pick fib retracement. I'm going to change some settings here before I apply this thing. I don't like all these negative numbers. I don't need the zeros. And I don't need the 61.8s. This is me personally. You can do what you want, but I'm going to go from pretty much high to low, and I missed it because I'm not very handy with the mouse. But you'll get used to these things. Or you know, you could do these with the mobile app, or with a iPhone, Android, iPad, Macintosh. So you might get handy with your fingers. And I totally messed that up. So I'm going to start over. I'm going to clear the drawings. And I'm going to try to make this again. Fib retracement. I'm going to go low to high. All right, close enough. So we're already back down to 61.8 just on this little mini retracement that I did right here. But we'll hang tight. So pretty much the 59.78 area would hit 38%. You know, I'd probably pull it up here closer to the top here, closer to 87. So there's where my stop is. I'm going to let this go for a while and see if we could make some new lows in crude oil. In the meantime, we were stopped out of our NQ. And you could see, I'm going to hit cancel all just in case. And that's where we're at. I'm going to demonstrate the breakout bracket here in a second. We've got about 12 minutes, but I'll go ahead and demonstrate it anyway. And I think we'll do it on a mini NASDAQ chart, although Actually, we'll do it on an ES chart for demonstration purposes. It'll be easier not to get accidentally stopped out. And then we're going to see if we could reverse this trend down here at 42. So, sorry for all this manipulation, but I want to get an order down here at 42. It's a long way to go, but you never know. So let's go ahead and do the bracket, the breakout bracket. This is a different idea. This is the only time you're going to actually place a trade from the middle of the price ladder. And I'm going to set it up first. First of all, let's make sure. All right, so here's your properties tab, overall properties tab. See, I'm going to turn it off. Breakout bracket's turned off. I want to make sure I go to properties that this breakout bracket is selected. That's checked. Scaling brackets will always be already there, but this breakout bracket needs to be checked. Okay, hit OK. All right, so now I'm set up to make this trade idea. And the other part of the equation is when I want a breakout bracket to start. So let's just set them at 8 and set them at 8. Now, this is unusual in that we're going to enter the market on a stop, right? Stops are traditionally thought of as protective, but you could enter the market on a stop order, right? Because the stop order is usually on what I would call the wrong side of the market, but you could enter on a stop. And in this case, this is going to be a bracket. So I'm going to go ahead and click my mouse. I got quick click checked. I got quantity 1. I'm going to turn my brackets, my simple bracket off. Quick click checked, quantity 1, and I'm going to click in the middle. And it's going to put a stop order to enter long at 20.5, and it's going to put a stop order to enter short at 16.50, right? Now notice I have 0 position. So the idea is if there is going to be a breakout, either up or down, you may be able to enter a position accordingly, according to the velocity of the market. And again, just like anything InfinityAT Dome, you could click and click to just change your price. It doesn't affect the action, the idea. So, and this is a more dangerous trade idea than the regular ones, right? Because you can get whipsawed, you can get filled and then stopped out right away. So you got to be careful with that. But this allows you basically to say, I know something violent's about to happen, and I shouldn't use the word violent. I should use the word volatile or explosive or dynamic or action-packed. You could even use that word. And but you don't know up or down. Maybe there's a number coming out, or maybe just on the open. So now we have a condition where we could take advantage of that. Now I'm going to cancel this, and I'm going to further add fuel to the fire. And what I'm going to do is I'm going to add a simple bracket to this trade idea, right? So let's just make it a little bit tighter here. 5 and 5, 6 and 6. So let's say I want to put the breakout bracket on. And what will happen is when one of these orders gets filled, the other order will automatically cancel. That's why it's an OCO breakout bracket, right? So I'll either be long one or short one. Now at that point in time, since I have the simple bracket auto checked, once my position is established, it will put a bracket around that position with a profit target of 6, which I predefined, and a stop loss of 6, which I predefined. So this is really an OCO with an OCO. Or an OCO-CO. No, it's not an OCO-CO. It's an OCO with an OCO. So that would be a more complicated trade idea, but it's a trade idea nonetheless that is automated, right? As long as you're logged into your connection, it could go. So as we get close to 8:30, we'll go ahead and try to put one on, see if anything happens. Looks like a low vol day, so I don't have too high hopes for something to happen, but let's just see what happens anyway. All right, where are we at in crude oil? Are we still in the crude oil trade? Yep. Still in the crude oil trade. Well, here's a great question. Jose asks, how did you set the 8 pip amount for the breakout order? All right, so for those of you who are Forex traders, a pip is the smallest price increment, and you know that. Futures traders, a pip is called a tick. I understand both, so I understand the question, and you could call it whatever you'd like to me, but just so everybody else knows, a pip is a term usually referred to as in a cash Forex context, right? Futures markets are contracts, are ticks rather. So this was a random, it was just a random setup for Jose for demonstration purposes. Let me cancel this whole thing. So when I set my breakout brackets at 8 and 8, this was just a random demonstration. This has nothing to do with, you know, technical analysis or good idea. I just want to see if we can get some kind of demonstration going for everybody since this is a webinar. And we are in sim mode, so I don't really care if we lose money or make money. You with me? All right, so let's go. What time is it? We have 5 minutes, so I'm going to put that. We'll put the breakout bracket in as we get closer. Let's go to an ES market. So right now, someone asked, what tells you it's a low vol day? I mean, so it's the summer. It's the week after July 4th. There's not a lot of economic releases. There's not official Fed announcements. Politics is business as usual. There's no OPEC meeting. And it's July. So in my mind right now, unless something changes dramatically, and let me get my tool out here. Let me get my channel tool out here. ES, let's go from, I don't know, we'll go from last night at some point. And I'm just going to make a channel here. You know, we're in a, what, 4 or 5 handle range right now, which is pretty low. 16 to 21, 5 handle range. So unless there's a compelling reason why there's going to be extenuating circumstances today, I don't believe that we're gonna have a wild and crazy day. And part of it's based on my muscle memory. I've been doing this for so long. And I'm so old. This is like embedded in my DNA a little bit. That's my gut feeling for today. So I think there's going to be a lot of, you know, volume profile trade ideas today where you're going to, you know, gravitate back toward what would be considered a point of control. And we could add that after a while, but I wouldn't add it until after the open so we get some more data in our books. You know, we've been trading since 1:30 this morning. Just about every single 30-minute candle has traded 30.18, right? So we're not really deviating from price too much. European, in Europe, again, we're in this range right here. Here's 1:30 to 2:30. You know, we had a little bit of a drag in the morning in Europe, and we kind of came back, and we're dragging back down to where we were in Europe. Again, this is just my sense of what's happening right now in the market. CL, if you're nervous about the CL position, a couple things you could do. Move your stop down to break even +1, or simply get out. I mean, you know, it's a profitable trade. You know, everyone's happy. If you're nervous about it, you know, move your target up. Move your target up. There's nothing wrong with that. There's nothing wrong with banking it. Okay, so we did that, and we're just going to go ahead and right-click this, hit the cancel out button, and we'll call it a day. Not a day, but we'll call it a trade. All right, breakout bracket. Let's do it. All right, so remember we were at 18. Here's the trick. We were at 1850 right when I demonstrated, and we're kind of slowly slinking down here, suggesting a lower open. Right now we're suggesting a lower open. We're slinking down here. So timing is of the essence because you don't want to put this in too soon. We'll go ahead and put it in now. You don't want to put it in too soon and get stopped and get in a position before the event, right? Before things kick off, right? So, but let's go ahead and put it in right now. It looks like it's 829. And I would even say let's raise this a little bit just to be careful. And let's see what happens here. We're trading below the channel, or at the bottom of the channel I drew earlier today. And let's see what happens. All right, Vincent's found it. I'm glad you found it, which means you didn't pay attention to one thing I just said. You were off on your charts. No, I'm just kidding. It's okay. All right, so there we go. So now, you know, there wasn't a big reaction yet, but there could be. And I might just tighten these up just to kind of show for demonstration purposes what does happen. All right, we got short. The other order canceled. The other entry order canceled. Profit target went in, and then our stop went in. And this is an OCO bracket. My hand is off the mouse, scratching my head right now, and I'm going to drink some Starbucks coffee. And we may win or we may lose. In any event, it will be an OCO on an OCO. Any questions on that? Getting a lot of different questions on indicators. I would, if you haven't already downloaded these web-based charts, I would do it. Doesn't matter if you're a customer or not. And I would just kind of go through all of the different studies that are on here and see how they're the Komuchu clouds, Keltner channels, MACD. These are all good stuff. This is all, I mean, pretty much anything that you've heard about in recent memories here. Now, having said that, if there's an indicator here that you do not see that you would like us to add to this thing, let me know what it is, and I will talk to the guys at Transact. These guys are geniuses. They get stuff done in a great way. You know, the whole idea here is not only to give you the tools that you need to attempt to be successful. Remember, trading futures is a hard proposition, but also to keep price feed quick, to keep the platform stable, and all that stuff. There's no third party here dealing with. There's no third party dealing with. There we go. We got our fill. The other thing stop. You know, we got zero position. We got nothing working. Hit cancel out just to make sure, and we're good to go. There's no third party here. There's no third party data vendor. There's no third party platform. It's all in house. It's all supported in house, and it's all, you know, the drive for toward perfection is something that everybody tries to achieve here, and to keep up with the demand for speed and keep up for the demand of, hey, when could I check my position on a phone? Well, you can now. When could I get out of a position on a phone? Well, you can now. And these are things that we've been asked to do, and we've done them in house. And you know, the guys at Transact are great. They know what they're doing. They're in house. They're not contractors or subcontractors. Joe asked about, yeah, Joe, Renko is being built right now. So hang tight on that. We'll get the Renko going. It is on the list. Dan said he arrived late. Dan, did you just get here? It's 8:33. You're an hour and 3 minutes late. You're not kind of late. You missed the whole thing. I'm just teasing you. Well, yeah, there's we're gonna put this on YouTube for sure. And just a simple overlay chart, you could do that pretty easily on the charts. It's called overlay. It's up here. And since I have this, I already have some stuff overlaid. So let me strip this down. Let's just strip down let's strip down the crude oil chart, and let me get rid of that fib line I drew. Let's clear that, and let's just go ahead and add I don't know, we'll add an ES on here just for fun, and it will. Now you see that little that overlay here is basically a line on close ES. If you wanted to add another one, I don't know, let's add gold, August gold. Is that even a thing? August gold, we'll find out in a second. There it is. It's dark blue. It's on there. So to answer your question, and if you wanted to change this to a line, or I'm sorry, line. There we go. So now I got 3 of them on there. Hopefully that answers your question. So yeah, you could do overlay charts like that on the new charts. Enrico, the bracket strategy is managed on your local device. There's pros and cons for doing it either way, but you need to be engaged. You need to be logged in. And it's been my experience that, shoot and pray method doesn't always work anyway. So I always tell people, be engaged, be ready, know what's going on with your positions. All right, so we covered a lot of ground. We covered how to enter an order. We covered how to modify an order, how to cancel an order, how to add a simple bracket, how to add a multi-target bracket, how to add a trailing stop, and how to add a breakout bracket. How to toggle back and forth between the charts, how to manipulate an open order on the charts, how it syncs with the trading ladder, how to add some indicators, and to look at different chart views at the same time. Hopefully that's helpful. The beauty in the trading platform really is, and it's in the, I'm going to use the word agility to trade, right? I mean, I could place orders simply by clicking the mouse. I could amend my order simply by clicking the mouse. Cancel, replace them. I could cancel them completely just by clicking the mouse. And the beauty is really in the speed, the functionality, and the simplicity. And remember, at the end of the day, there's only really 2 things that happen. Either the market will go up or the market will go down. I mean, it'll go sideways. Maybe you could say that's a third option, but it never stays at the same price, right? It never, you're not going to see 59.73 in crude oil, the only price for an hour. It's not going to happen, right? It's going to 72 bid, 73 offer. 72 bid at 73, 72 bid at 73. So 71 bid at 72. So this is the beauty of not only putting limit orders in, but putting stops in, and just the smart functionality. You put your mouse in a column and it says, hey, you're about to place a stop order. Hey, you're about to place a limit order. I mean, it's reminding you, it's telling you. You just right cancel. It's color coded, super cool. So this is really at the end of the day, in the heat of the battle, this is a great asset, I think, to traders. And here we are mimicking them on charts. We can see them on the charts. So if I missed any questions, I apologize. Type them in right now. We spent a couple more minutes before we go ahead and I think I'm going to get a blueberry muffin and another cup of coffee. Enrico, that's a good question. Is there a user manual? No, but if you go to our YouTube channel, please do this. Go to YouTube. No, here, easier way to do it is just go to infinityfutures.com, and then at the very bottom of the page, right below the risk. And I do want to remind everybody, trading futures, options on futures and retail off-exchange foreign currency transactions involve substantial risk of loss, not suitable for all investors. Remember that. It's important. But if you just click on this little YouTube button, it's going to pull up our channel. And on this channel, we have a bunch of videos. And we have a bunch of playlists. And specifically about the charts, and also about, there's tip of the week that's done usually by Marcus Zielbauer in my office. The InfinityAT Dome is done by Patrick Zielbauer in our office. I do a lot of the chart ones that are up here, and there's a whole bunch of them. So that's kind of that's your tutorial, right? That's your online tutorial, Enrico. And then secondly, phone a friend. You know, just like the game show. What is it? You can phone a friend. You have a lifeline. Let Infinity be your lifeline. Call a friend or call the trade desk at Transact, and they'll be happy to talk to you about any, hey, how do I do this, or how do I do this, or can I do this, or can I do that? Lastly, let me leave with you the idea that if you see something you'd like us to add, let us know. Because the idea is that we provide you with the tools that you need to be successful, or at least to attempt to be successful, and we wish you well. Having said all that, thank you everybody for coming. My name is Jim Cagnina. I appreciate you taking the time out of your busy schedule to be here. We're going to do this again every week, at least once, and we'll keep you posted. I'm going to email everybody with a direct link to this recording once it's posted. Have a good day.